Yeah, well, thank you so much, Gerard. You really do have a great representative for everyone joining us on the call today. Gerard really does go above and beyond, and all the resources the Government Blockchain Association provides are truly important. These are exciting times, and I'm happy to be here. So just thank you for the invitation. My name is Bill Rockwood. I'm the Deputy Legislative Director for Congressman Darren Soto. He is one of the more active members of Congress in this space. He is also one of the co-chairs of the Congressional Blockchain Caucus. So I handle a variety of issues, but focus a lot on emerging technologies, finance, and youth engagement issues. So happy to share some of the insights from what happens behind the doors of Congress from an individual office perspective, what the Blockchain Caucus is doing, et cetera. I'm sure we'll dive some into the infrastructure package because that's certainly in the news. I know we'll also be discussing El Salvador and some of the other Bitcoin initiatives in other countries. But yeah, just to give a high level snapshot of why you should care of what's going on and what some of the work we're doing. This has been in the news a lot recently, just because its involvement in some of the less than ideal language that ultimately got in the infrastructure package. But a lot of these efforts have been, I've been working on these issues for almost 5 years, and it's been a bit of a slow burn just getting any acknowledgement on these issues. But we've been very successful. This past year, our office passed the first blockchain bill out of the House of Representatives and the first digital assets bill out of the House of Representatives as well.
And Bill, you're essentially the driving force in the Congressional Blockchain Caucus, aren't you? Because I know that there have been some folks that have come and gone, but you have always struck me as being sort of the lead guy that makes stuff happen in the Congressional Blockchain Caucus. But let me move on and have.
I have to add one more thing. I'm here, and my views are my own. I do not necessarily represent the views of Congressman Soto. Have to say that for government purposes. But thanks again for having me here.
Bill, we're grateful that you're here. Todd, you want to introduce yourself, say a few words, and then we'll get on to Nabil and Silvio, and then we'll have you each do your opening statements.
Absolutely.
For everybody else, just FYI, since we are recording this, we are asking everybody to keep their video off during this first part of the talk, and then to turn your video on when you are speaking when we're in the open discussion phase. Todd, it's all yours.
Yes, good afternoon, everyone. It's a pleasure to be present and included in this discussion. I am Todd White, Managing Partner with Rulon & White Governance Strategies here in DC. And my background is very similar to Bill's, at least where I started out. I was a staffer for Chairman John Conyers. That was more straight out of school, so it was a little while ago. And I guess maybe I'll go in reverse chronology from that point, or forward chronology. I then left the Hill, and I was an investment banker for 10 years. And then I ended up coming back to DC and starting up a government affairs firm specializing in defense. And just to kind of give you a time imprint, that was about 2010 to 2012, because I went back to school. I went to, I have 2 master's degrees. I finished up at Harvard Kennedy School and then started up my firm. I was involved in probably about 20, 30 federal elections, and with a political party, which I'm not going to get into. And further from there, we more specialized in defense, and then we branched off on or about 2014 in cryptocurrencies, and we were the first government affairs lobbying firm to visit or meet with the CFTC and Chairman Giancarlo's office, which it was not deemed a priority at that time to discuss cryptocurrencies and blockchain. but I think everyone present in this wide consortium of those listening in know that where we are now certainly isn't where we began. So with that stated, we have been very active in the blockchain space as a boutique government affairs firm. And I think everyone knows what government affairs people do and power lobbyists do. We punch out and strike language out of bills on behalf of clients for retainer. And we've represented a whole host of different type of clients in the policy space. And we work on many bills. We've worked on the Blockchain Promotion Act. We've worked on the Regulatory Certainty Act. And we've represented, I should say, consulted Binance when they came to the United States. When Binance US was formed, I've worked with a particular blockchain or cryptocurrency pioneer through the Department of Justice and the National Security Division. I have also worked with, this is early on, between 2015, 2017, we worked with the now verboten ICOs that are not a very good structure now. And what we did is we shepherded a lot of these ICO startups in those that wanted to get into blockchain or that were in blockchain and crypto. And we kind of served again as a docent to the SEC, where they looked at trying to work with Regulation D so they wouldn't get dinged or better stated, fined. And then that kind of ran out of steam and we started representing blockchain companies, and we've been doing that ever since. And we also represent the Government Blockchain Association, so more relevant to date. And
I got to say one thing for those folks that are participating in this. We in the GBA, we are incredibly humbled that we've got guys like Bill Rockwood and Todd White that become a part of this association. The incredible amount of brain trust. Just here on this call. I mean, we've got incredible panelists, but just if you check the chat, by all means, feel free to connect with all these folks. And Todd, you're going to put your contact information in the chat as well, correct?
Absolutely.
Awesome. Silvio, you want to introduce yourself, followed by Nabil?
Sure. Yeah. Hi, guys. I'm Silvio, CEO of Logos Capital, lead of the Government Blockchain Association for Latin American Caribbean, based in Miami, Florida, where we do a lot of the GBA stuff here for Florida. Got a lot of cool chances to interact with Bill, representing our Florida community down here in Congress, and with Darren DeSoto's office, taking a lot of leadership. Darren being the chair of the Blockchain Caucus. It's been really great. Been developing some smart city projects now for the last 5 years, educating in blockchain the last 3 years plus, talking to central banks, local governments, and private sector, as well as academia, where I'm actively teaching blockchain classes in different markets and actively rolling out some practical applications to smart city work. And just excited to be with you here today and looking at how we can evolve the conversation. Thanks for your interest in what's happening. We think that obviously there's a big opportunity right now with the infrastructure, that's the infrastructure bill and the $1 trillion that are passing, to be able to do things that are future-proof, be able to create smart infrastructure that has the right data, AI, and things to make it possible for us to stay competitive. As you know, US is ranked D for infrastructure globally compared to other communities. And so I think that there's a really big opportunity for us to do things the right way, and integrated cybersecurity systems, which can be enabled by cutting edge technologies like blockchain, which will further then enable data science and AI and machine learning subsequently. I think is a really wonderful opportunity that I'd like to cover today, as well as what we're, some of the examples of what we're seeing in Latin America, with the president of El Salvador, for example, adopting Bitcoin as legal tender, So yeah, just nice to be here with you all these great speakers. Hey guys. And we have more than 300 attendees. That's huge. We have a great turnout today. Gerard, amazing work putting on a great event. So big shout out to the GBA for all their amazing work, educating everybody and going into the ditches, doing a lot of the heavy lifting for the rest of communities to be able to benefit, just like we've had here on the international stage in Miami. A lot of that groundwork has also been possible with GBA over the last few years. So big shout out to all the members in the public sector and the private sector that are actively involved. And Gerard, thanks for, along with Bill, Todd, and all the other speakers today. Thanks for being here.
Guys, I got to tell you, you will not be disappointed when you hear these guys start to share their knowledge. I could speak for so long about each one of them. Sylvia, the last time you were just incredible, all you guys. Nabil, for those of you who don't know Nabil is the guy that I go to with any kind of cryptocurrency question. In fact, just in full disclosure, Nabil has a consulting practice, right, where he basically helps people pick which cryptocurrencies he believes in, and he's the smartest guy I know with regards to all the different cryptocurrencies and their utility and their teams and all of the tokenomics and all of the fundamentals of the whole cryptocurrency ecospace. Nabil literally is one of the smartest guys that I know on this subject. And Nabil, I'm incredibly honored that you were able to share with us here. So.
Hey, Gerard, you're setting the bar really high right now.
Well, your comment to Sylvia in the chat was your hair looks really great today.
Because he kept waving his hair, and I wanted to tell him, and his hair looks great like always. Hi guys, my name is Nabil Malik. I've been in the cryptocurrency and blockchain environment for about 6-7 years. My company, we used to own a mining data center in Pennsylvania. I was the first miner in America to mine a coin called Coin. Currently, we build mining rigs for our clients. I manage a crypto portfolio for some of my clients, and then I consult and helping people understand cryptocurrency, how it moves, and I help them build their portfolios out, where I segment it into like 3 main areas. You have the top cap coins, right? Your Ethereum, your Bitcoin, Cardano, the middle, and then some low cap coins. Also, I've been really grateful to be part of GBA. I am a instructor. I help teach the blockchain certification course. Because of GBA, I've seen a couple of new countries. I've taught in Italy, in Manhattan, of course, DC.
Manhattan is not a new country. I mean, some folks on the call may take offense to that.
No, country and states. I should have said country and states. But it's a great group to be a part of. I love it. I've been part of it for about 5 years now. We run a meetup in DC where we all meet once a month. So if you're ever around DC, you can catch one of our meetups.
Sounds good. All right. So Bill, let's start with you. Actually, you know what? I'm going to change that a little bit. Let me start with Sylvia, because I do want to talk about what's happening in El Salvador. I think we'll spend most of our time on infrastructure, and I think Todd and Bill are going to be the key go-to guys in that. But I do want to talk about what's happening in El Salvador first. So Sylvia, you want to share with us your thoughts and perspectives, especially as it relates to the state of cryptocurrency in Central and South America, and potentially how that might have an impact in the United States?
Yeah, well, I mean, I think that, yeah, a lot of the guys, the situation in Latin America and the Caribbean that is happening right now, we can see, particularly, I think that the big flag is the fact that one country legalized cryptocurrency as legal tender, Bitcoin as legal tender in El Salvador. And so this serves as a really interesting case study, because we've already seen a couple of different layers of this, right? You have the central bank digital currency conversation, the CBDCs, right? And you already see that most central banks around the world are having central bank backed digital currency conversations of some sort, which is very different than adopting crypto as an asset, right? Now, when I think what's interesting about El Salvador, and we can touch on different countries, I'm going to monitor some of the comments. I'm seeing people are going to start to comment. So I'll be able to react to your comments and feedback in real time if you guys go ahead and drop some comments in the comment section. But what we're seeing is that now that an entire country has moved towards Bitcoin as legal tender, there begs the question of a lot of the other infrastructure that needed to be rolled out before, like the ATMs that they rolled out, et cetera. But even that being, still not seeing actual adoption. And here's where we come to the practicality of the issue, right? The day-to-day adoption of the people, of the businesses, of the small businesses, of the residents that live in the country. And yes, in this case, we have one country that's far off. So we got to think of like a spectrum of how far along are different countries in the spectrum, right? Now we have a country that's far off the end of the spectrum in terms of adoption, but is going to meet a series of obstacles in terms of not just how they were able to pass the legislation, which is a super difficult part, but now it's like, how are they being used, right, in day-to-day life? Venezuela, for example, launched a cryptocurrency called the Petro coin several years ago. I don't know if you guys remember. This might have been 5 years ago, and they tried to collateralize all the oil, and then they which was already owed to the Russian and the Cuban governments that had financed them. And they tried to force people to buy the oil with Petrocoin, and then it was like became illegal. It was like a huge mess that happened in Venezuela, but also a lot of learning lessons there, right? With the way that, with sort of what the wrong direction might look like in terms of case studies and failure points. El Salvador, it's live. We don't know, right? Really where it's going to go. We do seeing that, okay, even after it's passed, legislation is not being as actively adopted by everybody as one might suspect. For context, it's helpful to know that El Salvador actually depended. El Salvador has its currency. Who could tell me? I don't know if anybody knows what their currency was before adopting Bitcoin.
The US dollar.
That's right.
I'm not supposed to tell.
Yeah, Todd. No, exactly. It's the plus we got a better voice, much better for media if we turn this into a podcast later. But it's the US dollar, right? So the fact that, you know, this entire country operated on the USD and now they're going toward Bitcoin, right? There's a lot of implications in that, which, you know, we don't have to jump into right now, but obviously volatility, you know, digital wallets versus physical wallets. I had friends that went around Central America printing Bitcoin wallets into QR codes and giving them to people to be able to have a way to get in there. But what happens if you put that paper wallet in your washing machine and that's where your money was? Like, that's not, you know, that's not good.
Hey,
So anyway, yeah, I'll take a pause there. Gerard, I don't know if that answers, if that gives a little bit of a broad overview.
Yeah, I want to share. This is the actual Bitcoin law, and it's remarkably short. Todd, Bill, this is a hint to you guys on Capitol Hill. This is a short bill. But I like it's just that I'd like to just kind of read through it so people know exactly what this law says, right? So the purpose of this law is to regulate Bitcoin as an unrestricted legal tender while liberating power unlimited in any transactions to any title of the public. And then the next one here is the exchange rate between Bitcoin and the United States dollar, subsequently USD, will be freely established by the market. So they're not fixing the exchange rate at all. Prices may be expressed in Bitcoin, right? Article 4, tax contributions may be paid in Bitcoin. Article 5, exchanges in Bitcoin will not be subject to capital gains tax, just like any legal tender. So that's huge. For accounting purposes, the USD will be used as a reference currency. Article 7, every economic agent must accept Bitcoin as payment when offered to him by whoever acquires a good or service. So this is huge, right? And literally anybody who receives money has got to be able to accept Bitcoin. Without prejudice to the actions of the private sector, the state shall provide alternatives that allow the users to carry out transactions in Bitcoin and have automatic and instant conversion from Bitcoin to USD. If they wish, furthermore, the state will promote the necessary training and mechanisms so that the population can access Bitcoin. In other words, they talk about this later, the state is actually creating somewhat of a central bank that's going to take care of immediate liquidity between Bitcoin and the USD. The limitations and operations of the alternatives of automatic and instantaneous conversion from Bitcoin to USD provided by the state will be specified in the regulations issued for this purpose. The executive branch will create the necessary institutional structures to apply the law. The Central Reserve Bank and the superintendency of the financial system shall issue the corresponding regulations, right? And so Yeah, let's see, I just want to see. All obligations in money expressed in USD, right? Before the entry, what's that?
All obligations that were expressed in US dollar are now maybe paid in Bitcoin.
Right. So the bottom line is this law goes into effect 90 days afterwards. The bottom line is what the country has basically said is, yes, you can use it. You can still use USD, but then the country, you must accept Bitcoin. And the country is putting together all of the infrastructure necessary for everybody to do that. So I'm really kind of curious of, if this happens in El Salvador, does it then also happen in Guatemala, Panama, some of these other countries? And what is, Sylvia, what do you think the regional impact is to something like this? And you're on mute, Sylvia.
I think that the impact on what exactly you said, George?
Wait, I'm wondering what you think the impact is on the region.
Everybody's looking at. I mean, look, there's a couple of things that we got to keep in mind when we're talking about regional, right? We got to think geopolitics. Number one. And what do I mean geopolitics? Because there's been some moves to try to depeg the principal exchange currency in the region, being less reliant, and our loans being less reliant on USD, and then be taken up by things like renminbi. So, U.S. Bank of China, Chinese Development Corporation, they'll finance, and let's just to keep in line the infrastructure theme of today, right? The U.S. has historically financed a lot of ports and infrastructure in other markets. What the China has done is taken that USAID, OPIC, World Bank type model and done the same, but now they make their loans in renminbi to increase adoption of the renminbi or the yuan, Chinese yuan, into the repayment of how it would work. So there's a lot of interest at play. And then there's a lot of also a lot of people that are trying to just, right, if we've had a bad situation in the US, in Latin America, right, we just coming out of the pandemic, it's like higher situation. People are much more open to more radical ideas because the situation is so dire, right? I mean, it's bad for us in the US, but they say when the US sneezes, Latin America catches a cold, right? So I think these dynamics are really important to contextualize any answer I could give to this. And also that a lot of the politicians we're in the middle of a huge political moment throughout the region where a lot of new markets just in the end of last year and this upcoming new year, there's a lot of new elections that were happening with a lot of left-leaning elections that sort of been happening. So, for groups like that are also, there's several lessons to be learned, and there are different perspectives and lenses to be placed. So much to cover. I mean, there could be books just on this question. But for now, I think that let's look at what are the other markets in Latin America, for example, that also depend on the US dollar. Countries like Ecuador, for example, Panama, for example, and what are the implications to other countries in Latin America, the Caribbean that have the US dollar as their official reserve currency and that the central bank works with. And so that's one. And I think from that point of view, El Salvador is going to be what these countries are going to be looking at. And number two is from a broader perspective, not just that, but like taking a bigger step back is what does it mean for the conversations of central banks that are looking at issuing their own central bank-backed digital currency? Is this the best example that they're going to get? Which I would say is not the case, because in the case of a country adopting Bitcoin, they have no control over inflation and deflation. In fact, they have no deflation at all that's going to be possible for the foreseeable future as a mechanic of the central bank, because the central bank it can handle that. Now, if there's new departments and new institutions that are going to be have the charge to oversee this, that's also going to be another learning lesson, right? Right now, that's been an issue that we've had in the US. It's like, okay, what's between SEC, what's in FINRA for securities and STOs, and the SEC, what is an asset? Is it a currency? Is it an asset? If it's a currency or it's a derivative, is it the Chicago Mercantile Exchange that handles that and has jurisdiction and guidance over that? And even then, operationally, you have a whole nother sort of set of due diligence questions, which this opens up a can of worm, which is to say, okay, assuming that, right? Because even the regulator sometimes you'd say, you know, like Goldman Sachs, for example, was told in one situation by Fannie Mae and Freddie Mac that, you know, Fannie Mae and Freddie Mac was doing something in mortgages, not really the regulator, but then they went to the regulator that oversees them, and the regulator told them something about Fannie Mae, and now they're like, oh, well, now, you know, people like Jamie Dimon thinks, okay, now I have two regulators because these guys weren't regulating us, but they are able to exert influence. So who exerts influence over a non-regulated Bitcoin that's decentralized? You know, I mean, there is no regulation is a regulation in and of itself, right? It's just like not making a decision is a decision. So there's a lot of different dynamics that come to play to really be able to figure out the best way to slice and dice an analysis of the implications of El Salvador's Bitcoin adoption in regards and vis-a-vis the rest of the industry, at least the region, as it relates to the Americas and Latin America and the Caribbean particularly. Yeah, I think that's I would say those are the different flavors. There's a couple of others, like what we mentioned in terms of operations, which is what happens when you do apply it, and then the people need access to it. And it's a poor country like El Salvador is not a very rich market. They have very influential billionaires there. But what does that mean for, you know, what does that mean for the farmers? What does that mean for, you know, how do they get access to this? So in one way, we think about financial inclusion and cryptocurrencies being a potential avenue for radical financial inclusion and easy adoption into the financial system. But in other ways, here you have a leading case study, an example of implication and implementation that's not really seeing that facilitation of financial inclusion necessarily come to fruition. Why or why not? So those would be some of the, I would say, main talking points, Gerard. I don't know if that answers.
No, that's awesome. I want to transition over a little bit to Nabil. So
Yeah.
Nabil, we see what's going on in Central America with El Salvador.
Yep.
What's going on in the cryptocurrency space in general? Because we're gonna come back to the infrastructure bill and regulation.
Sure.
But are we just talking about Bitcoin? What are the other?
No, I mean, I think this is the year of full out adoption, right? So I look at things from a macro perspective. A lot of people are worried about the daily 10, 20% changes. But if you look at a 12-year chart on Bitcoin, it is the best investment asset in that time period, right? The X's are insane. But if you look at this year, right, I think this year is the institutional adoption. You have companies like Fortune 500 companies, Tesla. I mean, they're invested. Their balance sheet reflects Bitcoin. I mean, Elon Musk, you got PayPal in the game now. Visa yesterday announced that they bought $150,000 NFT. So they're getting involved in cryptocurrency. MasterCard is coming out with a debit card with XRP, where you can use XRP, Ripple, at any location MasterCard's accepted. Mass Mutual, which is a 100-year-old insurance company, put Bitcoin on their balance sheet. Starbucks accepts it. I mean, the list keeps on getting greater and greater. I mean, this is what was happening with the internet in the 90s, what's happening with cryptocurrency industry as a whole. I mean, if you look at it from a bigger perspective, you have countries adopting it, right? Like Silvio said, El Salvador. You have states like Miami and their mayor that is so on and, you know, loves Bitcoin. He's giving out grants for other companies to move into Miami that want to do a blockchain or crypto business. So, I mean, I see adoption happening very rapidly. On the other side, on the South Asia side, India exchanges just won the lawsuit in Supreme Court where they can now legally, Indian citizens can purchase cryptocurrency. So I think this is the full-blown year of institutional adoption, state adoption, international government adoption. Bitcoin isn't hidden anymore, right? Like if you look at a year ago or 2 years ago, you never had JP Morgan or a Fortune 500 company CEO ever talk about Bitcoin. because it was looked down upon, right? It was thought about the drug dealers' money. But I think that image slowly this year, especially, is shifting.
Awesome.
And we saw Bill, Gerard. Bill has his hand up. I think
Yeah.
he wants to comment in.
Yep. Billy, the floor is all yours.
Yeah, thanks. I know I'm the infrastructure guy, but I just kind of want to use some framing devices because I do think it connects these things. I think it's important to remember the origins of Bitcoin itself. They were a result of the financial crisis and the need from Satoshi to divorce himself from the traditional financial system. So I think that's an important thing to distinguish as when we look at, Latin America right now, but also some of the broader trends. I think in itself, I think it is, we're having a discussion of what is the role of government and cryptocurrency. I think it's been very divided all over the place. And I think you'll see a lot of these things in South America and Africa, just because cryptocurrency and blockchain itself are such financial inclusion devices that they're really betting big, that these are leapfrog technologies. So I think the question is a lot of times, and I think different bigger nations are grappling with this. Okay, if we allow things like Bitcoin as legal tender, well, do we also want to do a central bank digital currency? Or if we exclude everything a nation state does not control, we want to have control over that currency. So I think it's literally reframing the discussion of what is money to a country. A country like El Salvador was pegged to a foreign currency. So I think it is actually an assertion of financial independence, where you're less susceptible to another country's market movements and things like the World Bank and IMF conditional loans. When they're not even in your own currency, you have a lot of risk for inflationary pressures, conditional loans that can be suddenly collected. So I think there's some micro and macro level dynamics where I think governments are figuring out where they fit in. I think these are ultimate empowering devices of individuals and are, probably the most democratizing technologies that will exist in our lifetime. But I think it makes government a little uncomfortable in a lot of ways. And you can even see, I'll sort of end on this note that you can look at China as a great example. They were so far ahead fintech wise. You could take your phone and use QR codes 15 years ago, and even street vendors had QR code fintech device. Cash is very rarely used over there. And I think they saw this technology and actually got nervous that they were going to lose their lead in financial technology. So they were heavily involved. And now they've kind of gone the other way, that if they are going to have any infrastructure of cryptocurrency, they want to develop it themselves. They want it to be in-house. They want to be able to seize it themselves. They initially didn't like Bitcoin because people were posting censor resistant things on the network. So it's literally a question of sovereignty and, what the role of money and the government is. And I think all countries are going to land in different places on that. And even whether they use something that already exists like Bitcoin, or whether they try to develop something on their own.
Awesome.
Hey, Gerard, I got a couple points I'm going to point in as well. I don't want to digress in our conversation, which is moving forward quickly.
No, but Todd, I was about to hand it over to you, but in your points, I do want you to cover one or two things, and that is especially with regard to what just recently happened with the infrastructure bill, right? Where do we want to see government go, right? You essentially are somebody whose profession is to influence government, right? But based on where we've been and where we're going, in addition to whatever comments you want to make, try to hit on how would we, the people, like to influence government in terms of what that looks like, in terms of what government should do.
Absolutely. Well, before I think as a ethos or from the standpoint of those who have a vested interest in cryptocurrencies. I'm talking about the whole stratosphere here. I think that the first thing that has to happen is that there needs to be a self-regulating organization that comes forward and starts to put in their own mutual language first and foremost, before anything else that can happen, to move what this ethos wants to happen. As we abut the infrastructure bill and some of the more challenging or onerous things that we've seen in that particular bill. That has to happen fast. The other thing I think needs to happen is from the standpoint of lobbying or government affairs, there's going to certainly need to be a PAC. And actually there is a new PAC, the American Blockchain PAC, which is going to be launched next week. And those are certain elements to getting legislation right-sized from where we are now. And we really have to understand legislation. We have to understand certain elements of which we can go into later, procedurally, like the administration acts or some of the U.S. codes that this particular bill gleans on, that is kind of a stretch. We have to understand how those kind of comport to what we need to, how we need to shape what cryptocurrencies are and how we legislate it.
Awesome. And I think this is a good time just to remind folks that September 27th and 28th, the GBA is hosting, if you go to the GBAglobal.org homepage, you'll see blockchain and infrastructure. Several associations are coming together to try to educate lawmakers and policymakers. Unfortunately, no association from Florida is yet. So Silvio and Bill, you have a homework assignment from me, right? I do want to sort of slide over.
Can I make one comment there? I always try to give, as the person that takes a lot of these meetings and sees how they go. And this is no, I want to be candid and help facilitate this discussion. And I think it is a new industry. There's a huge learning curve in terms of what politics is and the nature of the beast. And I like to use the word rogue innovators. This whole ecosystem is based on people that believed in their own ideas, went and wrote some code, or invested in Bitcoin 10 years ago when everyone thought they were nuts. But two things to that we really need to realize, that this is a period of collaboration. Things that rewarded success in this ecosystem were stubbornness and the need to say, this is a little oversimplified, but I'm smarter than public sentiment. And where I just want to kind of refine that is when you're talking to members of Congress or policymakers, you have to be, and I agree with the PAC side. I think that's never hurts in politics. But one of the spots that I make as a general observation is that you need to meet the people you're talking to where they're ready to have the conversation. You shouldn't go into an office and have the same talking points for everybody. Even if you go in and ask a couple questions, have you ever heard of this stuff? Or something even more successful, ask the issues they care about. And anyone in this ecosystem can connect a use case for blockchain to something they care about. I hear it a lot where engineers in particular, no offense, you all are the lead innovators, but they get super excited and want to go into the most technical thing. You have 3 minutes of FaceTime with a member of Congress and you want to get in the weeds. Like, this is such a passionate community where I think if some of those sentiments were just refined and kind of repurposed a little bit, even if you think people on Twitter are stupid for investing in whatever, and even if a policy makes asked a very rudimentary question, I've seen it so many times of people just being dismissive. Oh, you don't get it. We got to educate. And it's like, yes, that's true, but don't do it in a dismissive way, or you sort of lose your audience before they even are willing to listen. So,
Hey,
because
Bill, can I ask some specific questions about that?
yep,
Because I've been thinking about this a lot lately, right? In terms of when we look at what decentralized cryptocurrency is and the challenges that it poses for governments, I find sort of the unstoppable force meeting the immovable object, right? And I, quite frankly, if folks ask me my advice, I don't really know what I would say. So I'd love to kind of hear from you and some of the folks on the call, right?
yeah.
One
And
of the
oh,
so one of the challenges that I see with a truly decentralized cryptocurrency, and let's use Bitcoin as an example. We recognize that there'll have to be others to extend the scalability issue, right? But one of the things about Bitcoin is at the point where it actually is a peer-to-peer currency or a peer-to-peer mechanism, we won't have the same AML, KYC, regulatory controls that we do when we're working through a centralized financial institution, right? How do we deal with that? Right? I mean, so right now people say yes, whenever you're dealing with a Coinbase or something like that, but the more people have decentralized cryptocurrency, the less need there is to work through a centralized third party or intermediary, right? And at a certain point, there's the same sort of government controls aren't there anymore. I don't have any idea how we actually deal with that, and I'm wondering if any of the panelists do, and then I'll throw it over to Diego after the panelists have a chance to address it. Bill, do you have any thoughts on that? You're on mute, Bill.
this is a two-part learning curve where I think there's a huge educational gap for policymakers, but politics is complicated. I'm not here defending the way the system works. It's highly broken and you have to be highly nimble to know how to navigate it. So I think this is an information exchange where I think some of the things that got into the infrastructure bill were because just that political unfamiliarity, like a rogue curveball of a random amendment. That's sort of how this place operates, but it was kind of unanticipated, and I'm not blaming folks for it, but there needed to be a chess move in response to that everyone thinks it's going to be the bill that passed. It was always probably going to be a amendment and a must pass bill. This was sort of last minute but just to your broader point, I think learning the political process, knowing the questions you are going to get in advance. Like the first time anyone hears about it, they're going to want to know about Bitcoin, money laundering, drug trafficking, energy consumption. Like there's 5 or 6 negative topics they want to go to. Have your built-in talking points for those. They want to talk about terrorist financing, say, the way the Russian hackers for the 2016 elections were ultimately identified were because they transacted in Bitcoin and they couldn't change the money laundering. Like the record is permanent. Energy, you talk about the shifts to proof of stake networks. So just anticipating some of those rudimentary questions, whenever you talk to a normal person with these things, that they don't know anything about. Just the questions they ask are going to be the same questions policymakers have, but probably a little bit more money is used for bad things, therefore it scares us. I think that's the biggest inhibitor right now is the educational gap. And then when a lot of policymakers hear about this for the first time, they want to jump to the negative implications. So you have to anticipate those, be willing to pivot, and then the last thing I'll land on is just being able to have different layers of conversation, being able to talk to somebody that doesn't know anything about this, having a moderate range for somebody who's interested but wants to find a path in, help them find a way to advocate. And then for the folks that do understand it better, whether in the agencies or certain members of Congress and their policy staff, you don't have to start at the same point. Like you don't have to give them the 101 stuff. So it's literally just anticipating different layers of conversation, seeing where your audience is at, and being ready if these questioning comments, because each of those things are actually, they're literally an invitation to have a conversation they don't understand. So I see those as a positive thing and not as a challenge to something you're trying to advocate for.
Yeah,
I concur with what Bill states. You have to meet a legislator where they are and be very prepared for those type of questions. I'll give you a case in point. Back in January 2020, when some of the Blockchain Promotion Act was kind of very much alive, and I was sitting in the office of Chairwoman Maxine Waters and some of her financial services staff. And one of the first things that kind of uttered out of the chairwoman's mouth was, well, Bitcoin. Well, some of the negative things that Bill kind of opined from the standpoint of what you're going to get. And so you really have to, be prepared to take that head on. But then you have to be able to juxtapose those type of topics as well. And the way that we do it is you have to start at a very fundamental, a basal level. And the way you do that is simply by talking about what is blockchain, or what is cryptocurrencies. And, we had to break it down to, it's programming in electricity. And let's take it from there. You have to kind of be creative. So I really agree with that. But one thing I want to also add is that in some of the infrastructure bills, and Congress has changed a lot. And one thing that I haven't seen in a long time since sequestration, which was the Budget Control Act 2013, is you see now within large bills, you see a lot of things added into legislation. And that's sometimes a little concerning for a lobbyist. And one thing that I can add is that's where you have to understand motions, bills. You have to understand what procedurally what comes next. And one thing that I found and saw in the infrastructure bill was the violation of the Administration Act, which basically kind of states that you have to have committee hearings on certain elements of what you're going to promote in a bill. And that was something that that kind of concerned me a little bit. So hopefully when this particular bill goes back to Congress and is discussed, or better stated, to the House, and some of these things are talked about, I hope that certain elements such as this are particularly raised. I'll leave it at that.
Yeah, thanks, Todd. I want to recognize Diego and then Will. Go ahead and make your comments or ask your questions.
Hello, can you guys hear me?
Yep.
Okay, can you guys?
Yeah, we hear you. Well, we did hear you until you disappeared. All right, Will, you want to ask your question or your comment?
Yeah, and this goes a little bit to Bill. And some of what's been brought up, regarding, how crypto has to be legislated so that it can function properly, but it kind of goes against the whole origin of crypto. That's, it's decentralized. So that conflict, and I think Gerard kind of touched upon that, is what I see as difficult. But I think another part that I think is very difficult is that legislators tend to listen more to the people that fund their organizations more than their constituents. So a lot of politicians are funded by special interest groups and banks, and I think that's where you might see things not move in the manner that the crypto enthusiasts want to see it to go. And I kind of just wanted your opinion on that, on how legislators look at their special interest versus their constituents and things of that nature.
Let me do this one thing. Let's hear from Will. So panelists, do me a favor, just jot that down. Let's hear from Diego, who got cut off, and then William Michael Cunningham. Let's hear all three of those, and then we'll have the panelists respond to all three, because I want to get through as many of these comments as we can. Diego? Thank
you, Gerard. This is a question for Todd White. It was actually two questions, if I can. The first one would be, you mentioned something about having an organization that self-regulates, kind of like the crypto ecosystem. That is correct, right?
Correct.
Yeah, okay. So I'm a developer, right? And as a developer, I'm really involved with programs that are done in an open source way, things like Linux. And, these programs are the backbone of the entire cloud infrastructures. So like what I'm thinking is, can, organizations that already exist that use the open source model be used as study cases to, build this theoretical organization that you're proposing? Well, if I'm not, mistaken what you're saying. And second, the other thing that worries me is in the crypto system, specifically in El Salvador. I'm from Costa Rica, but specifically in El Salvador, is that there's a really, like, as I see it, there's a barrier of entry for transactions because like the size of a block is 10 megabytes, and that makes it artificially that makes it so the transaction cost is really high, and like that's a problem for places that are developing markets. So like I would like to know how are those issues, like how is that issue being handled? That is all. Thank you.
Yep. And then William Michael Cunningham, why don't you ask your question, then I'll have the panelists respond to all three.
All right, real quickly. Actually, I've got the three questions. Answer one or none. China, crypto and social control. Will China move to a crypto model that involves social control with their social scoring mechanism? Is that what they're doing with the digital yuan? When will the Fed implement a digital dollar, or will the Fed implement a digital dollar? And then can somebody explain to me the crypto part of the infrastructure bill? I was completely confused by that whole thing. So that's it. Thank you.
All right, let's go with Nabil, Silvio, Todd, and then Bill. Nabil, do you want to take any part of that?
Sure, absolutely. Give me 1 second. Let me turn on my video. Hey guys, so I'm going to tell you what, people keep saying there's no regulation around crypto, but there is, right? A part of what I do is I've been doing taxes and accounting for the past decade. If you look at your 1040 from last year or from 2020, one of the questions on the 1040 that every American is being asked is, do you currently own cryptocurrency? When you cash out from cryptocurrency back to the US dollar, may that be from Coinbase, Gemini, XYZ, they are required to send a copy of the 1099 to you as their client and one to the IRS. So reporting is being done. Cryptocurrency is being regulated just like stocks are, right? You don't pay tax on the whole thing, you pay tax on your capital gain amount. So that's where we are right now. So when people say it's not regulated in America, I don't understand what they mean. Exchanges are regulated. Every exchange in America right now requires a KYC, know your customer, right? They ask for your social, your name, your address. You got to upload an ID usually, and then link a bank account that you transfer USD to crypto. So that's what's regulated currently, and it's working. The new regulation bill, I mean, that goes deeper into, following people's private wallets, which I think no government or any agency in the world really can do, right? It's very, very difficult to manage that. I'm going to give you an example. I buy one Bitcoin at today's price, whatever it is, 48,000 from Coinbase. I take it from Coinbase, I move it to Mandela. Mandela, I take it and move it to KuCoin. From KuCoin, I move it to my Ledger wallet. How is any agency ever gonna know where it's at, or how they know, right? It's very difficult, but that's the beauty of Bitcoin or cryptocurrency, right? The goal is for it to be decentralized and to be private. Yeah, if you want to come back to the US dollar, of course, you have to use Coinbase or Gemini, and that's when the US government will know.
Awesome. Thanks, Nabil. Sylvia, do you have any thoughts or comments on any of those three questions? You're on mute, my friend.
Yeah, no, I don't really have too many questions. I mean, I'd like to really zero in on the infrastructure bill if possible.
Okay, let me go to Todd and then Bill, and then we'll go back to the infrastructure bill.
Hey, let me take a shot at Michael's question. I think it was very clear what the issues are, and from a lobbyist perspective, who knocks out language in bills. One thing I can tell you is in the infrastructure bill, there is an infringement on Fourth Amendment rights from the standpoint of privacy. And one thing that I think is going to come up, at least we're going to bring it up, is the fact that when you talk about U.S. Supreme Court bills that kind of impinge on privacy, there are going to be some very, very important rulings coming up, and I was going to kind of mention what those were, but maybe I can write about those more later. But I think that Congress will have to push back on that or roll this back because they got ahead of themselves. So the 1099 issue, I think, will forestall itself. I really do.
Bill?
I don't understand why it would.
That's a great question, and I just think that.
No, just hear me out. My whole thought, right?
Yes.
So E-Trade, Robinhood, every place where you buy ETFs, stocks, indexes, issue a 1099. Why is crypto different? Why wouldn't you be taxed on the capital gain of crypto?
I'm happy to respond if you don't have a. I agree with some of your assessment that crypto is regulated a lot more than it is currently purported. I think there's a lot of ambiguities in how it's taxed. Like at some points it's taxed as a property. At some points.
No, help me understand your. Okay, explain your ambiguity. Right, it's very clear. It's
okay. Yep. I'm so right now, if you were to use cryptocurrencies for daily transactions within the US, let's say Bitcoin was suddenly accepted for regular transactions. Each time you sell, there's a apparent capital gains calculation that would need to be made if it was interpreted that way, because you have bought, let's say, Bitcoin at $10,000, it's now worth 50. You've experienced benefit of that thing. So even if you bought a $5 item, it's really because of that value fluctuation. Arguably, the IRS says now that you have to report that as a capital gain for every single transaction.
I agree.
Which
Absolutely.
it makes crypto for day-to-day transactions not feasible. I think a lot of people want to comply in this space, and I agree with, like, I think the sentiment of where you're coming from, that I think most people want to be good actors in this space, but it's so hard to comply that if you did get to a point, it would just not be enforceable.
There are exchanges that are making it a lot easier. I'm going to give you an example, right? So I just saw this the other day. Coinbase has a sector called Coinbase E-Commerce.
Mm-hmm.
So they will let you accept Bitcoin if you own, say, a 7-Eleven or a Quickie Mart or XYZ, right? They'll let you accept it And at that point of acceptance, you have a choice. As a merchant, do you want to keep the Bitcoin as Bitcoin, or do you want to keep it and roll it over to the dollar? If you roll it over to the dollar, as a merchant, you're not responsible for paying any capital gain tax because you've shifted it immediately.
Yep.
But if you want to keep it as Bitcoin, they're reporting the price that you got it at.
Yeah.
But most merchants, which I've talked to, I have a couple of friends that own dealerships that are accepting Bitcoin and other places. But what they do is they use companies like Coinbase E-Commerce or BitPay because they have to pay for their cost of goods, right? They can't hold on to all that Bitcoin. I buy a car for 10,000, I sell it for 12,000. I still owe somebody 10,000. So usually they shift back to the US dollar immediately because they have, you know, bills to pay and the lights to keep on.
Nabil,
Yep.
so GBA gets paid in Bitcoin, right? Some people pay for their membership in Bitcoin.
Yep.
And there's some people that we essentially pay in Bitcoin, in those particular cases, we're not working through any exchange, right? Essentially, it just goes into our wallet. And so
then the responsibility, Gerard, falls on you.
exactly.
If you're not using Coinbase E-Commerce or you're not using a service, the responsibility falls on you to document
Exactly.
each transaction and the capital gain that you're going to have if you decide to keep Bitcoin.
That's exactly right. And the deal is that as more of us have different cryptocurrencies, right, in our wallets, we'll either have to work through a centralized exchange that is regulated, right, or what Bill said, it becomes increasingly more difficult for us to calculate the capital gains for every transaction.
Absolutely.
And that's where we're kind of going into this, you know, so going back to Michael's comment, do we go more to a China model, right? Where we're all using cryptocurrency, but it's all operating through some kind of centralized exchange, or do we go to a world where it's more decentralized? We all have our own wallets and our own, you know, hardware wallets and phones.
I think that defeats the purpose of cryptocurrency.
Well,
exactly.
yeah, and I'll just add one thing that Nabil is talking from a more active investor perspective. And these tools were developed by these exchanges. I think it's right that more people will move through exchanges, but if random person who bought something through Venmo, who now you can buy crypto, like that average person, it's like, I want to buy some Dogecoin.
Yeah.
And they have no idea what any of these rules are. And even if they get that benefit and, you know, Mark Cuban suddenly accepts something for the Dallas Mavericks,
yeah,
April 15th rolls along, it becomes very hard for that average consumer. And additionally, it's very hard for the IRS is very behind in this. Their taxation guidance wasn't really updated since 2014. Like, where does staking fall on all this? Like, just the rules aren't workable. And I think we've continued to pressure the IRS to update their guidance.
Yeah.
And I think the private sector is doing a very good job at helping facilitate this. But if we ever want crypto to see its actualized potential, you want it to be a daily exchange item. So if the tax rules are ambiguous, then
that's been true with any new technology, right? I mean, the US government and the IRS was behind 10 years ago on the stock market, where stockbrokers were not issuing 1099s, and then eventually they made it mandatory, right? Option trading was not there for the regular, regular consumer until 5 years ago, right? So, I mean, I think technology leads the way to innovation, and then the IRS and government agencies catch up when there's a need for it.
Yep. And
It's true.
we can continue this. I think people want to transition to other stuff, but I will say we're having an important discussion. I'll take responsibility for getting the last 3 years in the appropriations bills, asking the IRS to update their guidance.
Yeah.
So I'm with you.
Bill, can I slide over to enforcement a little bit? Because one of the things that we see from a technology perspective is, and Bill and Nabil and I were speaking at an event this last weekend with these folks that have an entirely new blockchain, new cryptocurrency. And what we're seeing is this explosion of different blockchains. So while the government and IRS is sort of hyper-focused on Bitcoin and developing tools, chain analysis, blockchain intelligence group, others are creating great tools to be able to analyze the Bitcoin blockchain and identify, bad actors through, this data analysis. We're seeing an explosion of these other blockchains, right? And some of those blockchains are on technologies that don't even sit on the internet. You can use paper wallets. They use radio frequencies. How in the world is our enforcement agencies going to keep up with this explosion of different technologies? At a certain point, do they stop trying and essentially realize that maybe they've got to do it some other ways, right? But I don't know. I mean, have you guys had any conversations on the Hill about the explosion of the different technologies and just the resources that some of these agencies are going to need?
Yep. And I can talk about the budget all day. Everyone focuses on bills, which are incredibly hard to pass. But we've gotten probably somewhere on the order of 30 to 40 appropriations items in the last couple of years, just asking agency X to consider crypto, application Y to do whatever thing, asking the Food and Drug Administration to use blockchain technologies to trace contaminated food, asking the SEC to update their fraudulent advertising provisions. Like, that's the secret sauce that gets largely missed, and everyone pays attention to these bills that are going to take 6 years to pass. And I call it every February. I just throw a lot of crypto and blockchain darts at a dartboard, and they almost all stick. And it's just identifying each agency in a use case, because there is a resource mismatch. But the way the budget's constructed, Congress allocates those funds every year. And if there's any ambiguity on how, like, let's say the SEC can spend its money, well, SEC is actually a bad example. The Veterans Affairs Association, if it just says technology, update your technology to do X, like, there's some ambiguity in whether that applies to new technologies or emerging technologies. So even just identifying things in the budget process, agency, the Department of Energy should use blockchain to energy transaction across the grid. Or we say, like, emerging technologies, comma, like blockchain, comma. And part of it is these agencies do have smart individuals that are looking into these things. I think they aren't staffed, and a lot of times they're not even clear if the funding they do get can be used for these pilots and these research initiatives. So that's one step, is just making it clear that Department of Energy, you get $1 billion. Of that, 20 should be used for emerging tech research and consideration of blockchain technology. So using the budget language like that, and that's really where, just be nice to your congressional staffers, because it's a lot of legwork, but bills are hard to pass. And my strategy has always been that those breadcrumbs of success, whenever this starts to move, I literally have a document of every piece of budget language it's got in. It's like, why should we care about blockchain technology? Can point to this pilot, that agency use case. So it's literally breadcrumbing this incremental success, because I think there will be a consideration, especially with China being so aggressive and wanting to take the lead in this, that it's sort of like AI and quantum and some of the other emerging techs. Like, we can't lose. We don't want to lose this one. And I'll just make one more China comment, because somebody asked China social control, Fed digital dollar announcement 2023, I think is their target date. But there is a world in where countries that don't share our values, ownership of these cryptocurrencies are a big thing, where China is developing its own thing. And I think it's going to be ultimately tied to its Belt and Road Initiative. That if China, instead of giving you renminbi or US dollars, they're going to issue a conditional infrastructure loan for whatever country to build a port. And guess what? If you don't pay them back at some exorbitant interest rate, they get ownership of the port and they can immediately seize the asset. Where 1980s style I won't name any agencies, conditional loans, it's difficult to collect. But there's literally a world where if other countries lead, the infrastructure projects of the world will be built on these. And there literally is a bit of a sense of East versus West, where China is scared that they're going to fall behind, and they're trying to hoard it. And I know that goes against the libertarian ethos of the origins of crypto, but that's just the Chinese take on that technology. So I think there is a very real sense of competition between countries. And we really just want to promote an environment of innovation. I don't want to say it has to be one country or not. We just want developers to be able to develop and let these cool things and these cool applications develop on their own.
Hey, Gerard, there's one other thing I want to point out that many don't realize is that China is the one of the largest holders of Bitcoin, with nearly 70 million coins. And I don't think they're done with what they intend to do with Bitcoin. But I do believe, as Bill alluded to, it will have something to do with the interface of the Belt and Road Initiative.
So that's a great sort of pivot point. We had shared an article just recently, or I think it was this morning, about Iran kicking up mining again, right? And I'm kind of interested from a global perspective. You know what? And let me start with you, Nabil. You want to just talk a little bit about what decentralized finance is, and then I want to talk a little bit about what's the implication of decentralized finance from a geopolitical standpoint, and especially things like staking and where people are putting their money, right? Because we just recently saw one article that said more money is now going into decentralized finance than is going to federal bonds. And how does the government function if people are essentially moving? You know, they're looking at the national debt, they're looking at what the risk is there compared to the kind of returns that they're getting in decentralized finance. So, Nabil, if you're still with us, is there anything you can share with us about DeFi and what's happening in terms of the shift from traditional bond investment to DeFi? You are on mute. I wonder if you stepped away. Todd, do you want to take that?
I don't think I'm the best suitor for decentralized finance. Certainly, I know a lot about it, but I don't think I can round out that question as well.
All right. Well, let me. If anybody else wants to kick in on this subject, because it clearly is a very important subject. So traditionally, banks have needed depositors to put money into their savings account so that they would have the liquidity to make loans, right?
Right.
And so as the government has increased the money supply, they've basically reduced the bank's reserve requirements. So the banks don't need as much money in deposits in order for them to give loans. Exchanges, especially these decentralized exchanges, they don't have that advantage. So they need the liquidity, right? They need people to essentially deposit, or what they call staking. So if you take your cryptocurrency and you stake it with an exchange, then they need that and they're willing to pay for that. So some decentralized exchanges are paying up to 300% initially, right? And then it sort of levels down somewhere into the 5 to 30% for people to stake their cryptocurrency. So as we're seeing more and more people take their liquid assets and putting it into decentralized exchanges, essentially it robs it from some of the more traditional investments, and the economic impact can be quite extreme. So does anybody want to make any comments on the subject of DeFi and how that potentially impacts us in the economy? Bill, do you want to hit that?
Yeah, frankly, I think we're a few years out from that discussion from a policy standpoint. Arguably, you could say the amendment to the infrastructure package originated out of a concern to target DeFi. So exchanges, I think getting exchanges right at a point of first instance is important. But DeFi is such a dramatic departure from the traditional financial system. I think number one, most folks don't understand it at a policymaking level. Number two, I think if they did, it would make them uncomfortable because there's an additional layer of disconnection. So I think it's actually better to let that sleeping dogs lie on that and just be prepared when it does come. The model I would think would make sense is if we get the exchanges right, then you could apply analogous rules to DeFi. They'd have to be modified, but I think that's a logical progression of regulatory structure. But it's gonna always be an interesting debate because DeFi and authoritarian regimes are always going to have an interesting interplay. So again, we just go back to that item of level of government control and money, and I think certain countries are going to crack down on that because they don't get to have their finger on the scale enough.
Yeah.
And I would also agree with that. And the other point I'd like to make is if kind of bringing this back to the United States and our policy frameworks, we have to get back to the term first principles, right? And I'd like to define what first principles are. I mean, we can kind of project in what's going to happen with DeFi, what's going to happen here and there. But the first thing that has to happen is there has to be a preserved mutuality of definitions between the crypto ethos and Congress. And we have to agree on these terms. If we don't agree on these terms, we're going to have an incongruous policy that just really doesn't go anywhere. And there's just going to continue to be a big ball of just confusion, because there's always going to be, as this ecosystem replicates, there's always going to, I'm repeating my point here, there's always going to be a certain paucity of this ecosystem that is not understood. So first principles is sacrosanct here. And that has to happen before anything else evolves here. And then we can move forward at a quicker rate.
Awesome. Will Lopez followed by Paul. And Paul, when you make your comments, I'd love for you to share just a little bit about your technology, because it's really fascinating and I think it do folks a lot of good. Will, go ahead.
Yeah, I just want you had asked about like how China and international, looking at developing nations. And the only thing I wanted to say is, if we look at El Salvador and we see that, the United Nations refused to help them transition to Bitcoin, the IMF warned them against using Bitcoin, and Fitch Rating, the insurance regulatory part of that, also had a big concern. So that's just my 2 cents. You've already seen these big groups come out against that, so that might answer some of your question as to how funding might take place if you're moving to decentralized over traditional banking.
Got it. Paul?
All right, thanks for giving me a chance. A couple of points I'd just like to make, and I think directed to Bill if he's the most influential here. But in terms of the regulatory side, I'm not the biggest fan. I'm a little bit wary of DeFi. However, I'm conscious of the innovation and ideas that are being presented, in these alternatives to industries. And I think what the regulators have to know is that these are normally offshore organizations, offshore protocols. And so any regulation that hampers the US is actually going to kill the innovation in the US, rather than actually killing the DeFi protocols. And I would say the regulation, if anything, should go towards buyer beware and understanding the risks, so that there's at least, if you're going into a recourse, no recourse situation, that the people have agreed to that, and then again let this ecosystem evolve. Having said that, the other point I'd like to make about these DeFi protocols, and to Gerard's point, is there's not really true spread-based lending. You're staking, you're lending your crypto asset to be transferred into another asset, and a lot of these protocols rely on asset appreciation to generate the returns to give them the interest rate. So you've got very risky structures backing a lot of these things. They're predominantly cleared through Ethereum on a public smart contract. So therefore, all your terms can be read and front run. So there's a lot of risk involved, which I don't think everybody fully understands with these protocols. So again, I'd caution everybody. And there's a lot of people making money and thinking if they're making money, that must be all good. But not all ways of making money are good. And Gerard, again, thanks for the opportunity. We're developing a protocol that has the means to synchronize a network without consensus or a competition like mining, so we can operate at real time on a distributed way. And although we're predominantly geared to a permissioned, regulated license industry, we are positioned potentially to help the DeFi crypto worlds by tokenizing and digitizing their assets to allow, actually, what the biggest problem with, like I said, the DeFi protocols and public blockchains is a regulated institution, or particularly a fiduciary, is not going to want to touch those. Whereas we're providing an input so they can, wall garden their crypto positions and then transact them at high speed and actually do proper spread-based lending. Within our real-time processing, we have transacting periods, so we can actually record future dated payables and receivables, which you need in a financing network. So we've got a lot of. So if anyone's interested, feel free to reach out to me. But it's more or less a full functioning capital markets as opposed to just a crypto asset.
Yeah, Paul, do me a favor, please put your contact information in the chat. And Bill, I would suggest that if you need folks to testify and explain how blockchain could be used really in a very disciplined, regulated way, Paul and his outfit are just a phenomenal resource to explain that.
Hey, can I say something really quick? And,
yeah, Todd, hang tight. Todd, hang tight for just a second, because William Michael Cunningham headed up, and then Todd, you're right after that.
Sure.
All right, look, here's the truth of the situation. The bottom line is that the financial system, I just posted to the chat room some research from Chicago Booth that puts the truth to this lie about savings being productive at this level. Savings are not productive at this level. They go into consumption for wealthy people and exacerbate income and wealth inequalities. The point that Satoshi made about crypto was to address the issue that the technology allowed you to innovate in a way that increased social returns. Now, part of the issue with DeFi is just from my perspective, it's a bunch of rich white guys trying to take advantage of this new technology and positioning the technology as inclusive. It is not. And the test is go to Anacostia, Southeast Washington, D.C., and test your DeFi solutions and see if it works for those Black people over there. It does not. So this is part of the issue. And as always with these technologies, the truth will out. The truth will eventually win out. We'll have crises and issues, and basically you'll see that these so-called inclusive technologies are anything but.
Thank you, Michael. And Michael, can I just say one thing? Or sorry, I love saying your full name. William Michael Cunningham. It just sounds so official. We got another friend of ours, John Dean Marcunis. Right? There's something about those three words that fit together. But
well, thank you,
William Michael Cunningham has been with us for a long time, and you had a profound impact on actually my wife. We were at the Georgetown University event a couple of years ago, and I remember you making a comment, and my wife has repeated that comment probably 30 times since then. So your words do have power. I will share it. Todd, you wanted to make a comment, and then after that,
I do want to make a point. I think it's really important, and it's actually directed to Paul Dowling. And one thing that just being on the Hill quite a bit and following and working with members, staffers, one thing that I can tell you, or specifically the Financial Services Committee with regard to blockchain and cryptocurrency legislation, one thing has to change. And I want everyone present to understand this. So when there are testimonies that begin, the one thing that I always see, and I think that Bill will concur, seemingly, is that the Financial Services Committee or the FinTech Committee, they always go and get these professors out of the universities to testify before Congress. And the one thing that has to change if we're going to move this ecosystem forward is we have to bring forward the builders, the architect, and the developers to articulate to members of Congress what has to be done and what it is that they are doing. And I hope this is very, very clear going forward. And we don't see, we see less of the professors, because the professors are of ideologies and thoughts and not putting things together in developing actual technologies. There's a difference there. I'll leave it there.
Awesome. And I think I missed her name. Abrigade wanted to make a comment about SEC, and then I want to get it over to Paul and then back over to Bill. I hope I said her name correctly. Well, I said keeping up with his chat is hard. You guys are talking up a storm. Paul, why don't you go ahead and then I know Bill wanted to make some comments as well.
Yeah, no, I just want to say to what Todd exactly said. I concur with his thoughts, and in representing what we're doing and in trying to educate our prospective clients and investors about this nascent industry, is that you're often dealing with the data scientists, who you're the professors, and then the investment bankers or the salesmen. And it's very rare that you meet people who have run back offices, run operations, actually managed a ledger. And I came from the custodial side of the business and got into the lending side, but predominantly from an operational and process re-engineering process. So it's the mechanics of how this works that is the important thing to understand why there's an opportunity. And I'll just add one thing. The big risk with ignoring this technology is the financial services is built on 1980s coding technology that's crumbling and it's about to sort of collapse under its own weight, let alone people who can actually fix the code that it's backed up on. So the idea of being able to transition to a new type of infrastructure is actually a key important point. So I agree. You want, I don't necessarily mean to dismiss the other points of view, but you want it at least a holistic view, and not just the theoreticians and the salesmen. You've got to get to the practical realities.
Yep, absolutely. Bill, I want to give you a chance to make some comments, because things move fast, and you want to comment on anything.
Yeah,
and if anybody wants to make a comment, feel free to raise your hand. This is sort of open discussion, and I hope you guys appreciate this format. We try to get thought leaders together and folks that are trying to learn in an open dialogue, and I just want to again thank our panelists and all of you guys for being part of this dialogue. Bill, the floor is yours.
Yep. And I'll address some of the past questions. I would like to reserve 5-7 minutes just for the infrastructure stuff, because I'd like to give people a procedural history and an upcoming attractions of what's coming in the House. We have some announcements coming out, and I'd like to get some reaction to that myself.
Take your time and take as much time as you like, because it's important.
Well, yeah. So I'll answer the prior questions, and then if it's okay, can you just cue me up when I'm done talking with the infrastructure like softball, so that resets me to answer your question?
Okay,
perfect. There's a lot going on right now, and I'm a big believer in this I'm very personally invested, take a lot of pride in the fact that the bills that passed, I draft my own legislation, so you just have to find people that, I'm not trying to discount the importance of the Todds and the different groups, but it's a tricky ecosystem to navigate. And frankly, it's very hard as a staffer that is passionate about this, because you always have to be encouraging. You're told a lot that either you're not smart as smart as me as the innovator, or that you're not a good enough translator to communicate it to somebody that doesn't understand. So I completely agree with Todd's point that when I hear a lot of people talk, if they have an empowering story or a narrative, those are the people I tend to highlight and invite to potential blockchain caucus events. There's a very important tone part. But of all the members of Congress, it's that warm story of that $500 loan that turned into something. Like, you have to make this real. Like, humans are fundamentally a storytelling people, and the narratives are so important. And just being upbeat. I see a lot of dismissiveness, and these things are still sorting out. And I understand that there's so much frustration at the pace of innovation. I am like literally there, and I'm being a little critical and opening up this discussion, because I think if there is a frustration and a tone that comes with that at things moving too slowly, then you kind of check yourself out of the conversation. These things are going to happen incrementally. I think we do need to acknowledge the financial inclusiveness part. Finance has historically, I don't need to go into the history, but there are literally courses. I have my LLM in financial regulations. There are whole courses about the inequity of the economics and the financial system. And I think crypto does have a chance to get it right. I think it's an interesting year where institutional investors are getting involved more the first time, because they're realizing there's a new tech in town. So it'll be interesting to see how that plays out and what ethos preserves, because these pre-existing industries have had it good for a while, and they're not just going to let things change without them throwing their weight around. So I think we need to be cognizant that it is great that some of these things are incorporating crypto into their payment systems, but we also need to, see in which ways they're doing it. Are they just doing it to preserve their market share, or are they actually trying to expand social inclusiveness? There's 2 billion or 2 trillion unbanked people in the world. They don't have access to a bank account, but they have access to their phone and the internet. And I think that is the ultimate empowerment of crypto, is that it allows those types of things to happen. So that's my soapbox, and then I'll let you ask the softball, Gerard.
Well, Bill, we'd love to hear a little bit more about the infrastructure bill. Tell us a little bit about sort of the history in terms of and one of the questions, I think, I don't know if it was, I don't remember who it was, wants to know about how did this crypto stuff get in there, maybe who the drivers were.
Yep.
And,
what that who's going to see this? I know it's recorded, but who's going to see this?
This is going to be posted on our YouTube channel, so it will be completely publicly available.
Chatham House rules, Bill.
No.
Yeah.
Not here.
Well, okay, I'm going to sanitize the language a little bit just for that reason. But there's some things are going on behind the scenes at the major agencies in Treasury. And from what I heard, Portman's original language originated from a Treasury staffer who went to them with the amendment, and poof, there it's introduced. I think, I don't know if Portman even had much of a background, but they took it on good faith that it was properly drafted. And I think when the text was digested and understood, it was seen to have some very extensive scope and some exclusions that weren't explicit. And they contended that, we're going to be good actors and we're going to read it the right way. And but I think this was a Treasury initiated thing. This SEC got really involved, and then it just got really political. And this is why I keep talking about people And I'll even go a step further, and egos. Egos are so toxic to this ecosystem because I think you had some people that intentionally were disruptive because they wanted to be the face of the crypto savior. They wanted to be the crypto regulator. Some people wanted their legacy literally to be the one that brought crypto into the traditional finance system. And I won't say which instances that occurred, but it's just from hearing things from various groups that I'm engaged with. There were just 3 or 4 obvious pain points where there were just an agency or a particular person within an agency or a particular member of Congress that wanted to be the person, and even some of the various groups sometimes. So one general comment I'll make is that at this point, this is beyond any person. We need to stop that, and we need to not let I'm going to be the crypto staffer, I'm going to be the crypto member, because it's literally slowing down growth because everyone wants to own it. And this is such a big thing where I think you literally had a treasury staffer that was trying to tease something they were already working on. I think something's forthcoming in the next couple months. And then there was pushback when the amendments got offered because they wanted the press release. Like, we're already working on this, don't take away our discretionary authority. And then there was a lot of debate. It took front and center the fact a crypto provision delayed a vote by 2-3 days on the biggest much passed bill of arguably the whole administration thus far, but definitely this year. I think shows the advocacy power of the crypto community. But I'll push back a little bit and say that crypto advocates are so great and so engaged, but they mobilize even more when it's in opposition to something. So the real reverse engineering question is, how do we unite that in the other direction, where again, we say this is bigger than one group or one member, how do we channel that focus energy that came out and public attention that came out against these provisions in a positive direction? I think there are a lot of debates about, identity and this and that, and that's why blockchain matters. But I think if we start to identify some core principles of those foundational issues and then throw our united weight around those, that's how we're going to move things, because dealt a lot with the Senate. And I think only 2 senators I've ever talked to after 4 years have ever asked about this. And then it became the hot button issue and everyone wanted to know. So it passed. The fact that it got into the base bill, I think there even was agreement that it should be amended, but procedurally, if you open it up to one amendment, you have to open it up to all of them. And then literally a defense provision from a member who ultimately said they agreed with the compromise amendment got in there just because he wanted $50 million in defense spending for his state. So that's the current state of play. I'll tease it a little bit and say, so what's next? There are 2 stages this needs to go through. 3 needs to go through the House, needs to be signed by the president, and then let's just assume that this underlying text passes. Worst case scenario, it still takes a year or 2 for that language to be interpreted, a rule to be made. So there are a couple advocacy points in which folks can mobilize. That said, this bill needs to pass out of the House. I think the Twitter stuff was like, oh, we got to amend the House bill. And I'll just tell you politically, they're never going to open that. Never. And anyone who's worth anything in the advocacy space, like, there are reasons you do letters for optics reasons, but it's just, the House isn't going to be the reason that the president's biggest bill of the year doesn't pass. Because if they amend anything, then it has to be revoted on in the Senate, and it jeopardizes the whole thing. So let's get that out of the way. And I think advocacy efforts are important. So I'm not saying those people are stupid, but it's just a political assumption we need to make. But in just like the procedural mess that occurred in the Senate, it's so hard to explain what reconciliation is and the different amendments. There are ways to do this on the back end. Even if an amendment doesn't work, I think some folks have seen the infrastructure bill has been linked to a larger reconciliation packages. I'm not going to go into the specifics of what that means. Give it a Google. It's a procedural fun show. But so what we did yesterday, and I don't know if it's made the news yet, but it'll be out there. It just was clear that there was some support. There was universal support around the compromise amendment, and there was even greater fervor around the within the crypto space between the Wyden Loomis Toomey amendment, because there were more exclusions. And I think the key part were software and protocol developers were excluded in that one. So again, why didn't that more accepted one get passed as the compromise amendment? A couple of those actors I'm referring to inserted themselves and wouldn't sign off on it. And there was some late hour stuff. But anyways, I say all that we at least have two things that have broad support. So what we did yesterday is we had those amendments drafted as original language as standalone bills. And we introduced those yesterday. Literally the same thing of what the amendments were trying to do. They just became larger bills because it's, instead of a paragraph amendment, you have to set it up with a 6-page bill to have the same procedural effect. And what this does is two things. Is it plants the flag for a future debate that if the law as is gets passed, at least we have a starting point where there was broad agreement. And that is our political starting point. I know it's not everyone's preferred language and it's not perfect, but the politicking is already done. So we need to just assume that's the starting point and we can work from there. We also introduced the Wyden Amendment. I know it's more favorable within the industry, and that's why we did both. We're not married to one idea. We're just acknowledging political realities and see what happens. We're going to present both of these to leadership and encourage them to adopt them within their reconciliation package. The only thing you need to know there is it is a candidate because it affects revenue. So there is a procedural way to get this in. So these standalone bills represent two things: a procedural play, an advocacy effort that if reconciliation moves forward, we can write a letter to leadership and say there is broad support. Please consider including a crypto provision in reconciliation. And as long as those provisions don't directly modify the Senate language or and they have to have a revenue effect, it's able to get in. And we can make very good arguments for those things with what I just said. And then beyond going to House leadership, I'm going to encourage advocates in the space and various members, and I got to type up this complicated email after this, to hopefully we can build a coalition behind this effort to show a united front, this letter to leadership. But then there are potentially 3 committees this could go to. Reconciliation just tells the 12 House committees and the 13 Senate committees that your budgets are going to be adjusted up or down. And you can't create new programs, you can't contradict existing authorities, but you can create new funds for existing programs. So if this bill passes the Senate, there is a pre-existing authority and there's an argument you can make that it needs to be raised or lowered through the exemptions. And we'll end there on the reconciliation angle. I think that's the most viable play in the short term. It's unlikely, but this was just something, honestly, I've been very quiet about because there's so much debate internally, and it just, for whatever reason, I just saw this as the narrow path, and I hope it builds support. My boss is obviously leading and championing this strategy, and we're going to build as much of a coalition behind it. And beyond that, if it is not included in reconciliation, there is, again, that baseline And if we can get senators on the record and saying, oops, we messed up on crypto, it provides a fast track for those bills to pass as independent bills.
And Bill, what can we do? What can we do as an organization to support your efforts? Because we have a couple of people here on the call, but we also have a pretty big community. Is there anything we can do to support your efforts?
I appreciate that question. Give me a few days to write that email, because some folks are going to be a little sensitive to the fact that they weren't consulted before this rolled out. So I need to phrase it right. But if that makes sense, I think if we can get as broad of a coalition of support on that original letter, just asking House leadership and Senate leadership to consider it, that's my play. And then beyond that, and even better, if we can reference the two bills, that's just my thing we can reference, because it's always helpful to have legislative text to refer to, but we're not wed to that. Other things are in play. I think it's just an acknowledgement that it could be included. And then beyond that, we need to rally advocacy efforts, just like there were a lot of calls to senators 2-3 weeks ago saying this is important. You're going to have to do the same thing on the House side and the Senate side. This is important. It should be considered in reconciliation or these bills, because members sit on individual committees and they're literally listening to members right now on what part should we tinker with in our budget allocation. And if we get this critical mass, so I think there's a collective effort, but there's also a grassroots thing where, if it's a letter to each committee, outreach efforts to each member, when this opens up in a week, it's probably going to be September, October. We just need to have the forces mobilized and ready to go, whether it's call campaigns, letters.
Yeah, listen, that's a great segue to a couple of things. One is we're actually mailing out a letter this evening to every member of the House and Senate, inviting them to participate in the blockchain and infrastructure event that we're doing in DC, September 27th and 28th. We are bringing together associations from around the world, and what we really want to do is create that positive force, Bill, that you're talking about. Not mobilizing around anything negative, but the daytime event is really intended to be educational, and then that evening reception is when we want to get lawmakers and their staff together to just rub shoulders and elbows with people who are doing things in the community, that they can just have conversations about what the impacts of legislation might be and how they can work together. And so and again, I'll put this event in the chat. So we're going to encourage anybody who's seriously interested in this space to participate. It is a hybrid event, but we want to try to get as many people in Washington as possible to attend. And Bill, we want to work with you and your team, because we really appreciate all the work that you're doing. And we have a great network. GBA is not a lobbying organization, but we certainly are more than happy to support our friends in that space. So I just want you to know that you have an army of folks here at your disposal. If you give us some marching orders, we're happy to roll with it.
I appreciate it. And just as another tip, be nice to staff, because literally they're going to be the ones that have to research this. Their boss will need a 2-minute debrief on this. So a lot of times, if you can get a staffer interested, that's where it's at. It's not always about getting the principal, but I appreciate the efforts. And
Bill, what's the organization that's been the nicest to staff that you know of? Go ahead, you can say it.
I have told Gerard this several times. The Government Blockchain Association, I'm a huge fan. They're a great resource, but they get the people side. They really do. We have a lot of bright engineers and developers in this, but this is a people do things ultimately. So you got to really, and Gerard's the best. He knows this stuff, but he does the soft stuff really well.
I appreciate that. Listen,
one thing I'm going to say is there's a slant to this, and I think Bill did a very good job in articulating what has to happen procedurally as this bill goes back to the House. The one thing that isn't elevated, I've been in DC for 10 years, and the only thing that moves legislation is money. And the only way that you can put it into getting legislation the way that you want it, then you have to put it in a pack. You have to lobby, and you have to know the procedures. I know I said it earlier, but that's what's going to change thoughts, minds of legislators, because behind the discussion points, there's politics as well. I think everyone knows that. And it's if you support my bill, I'll support yours. So that's why money changes things in Washington, D.C. And that's why the American Blockchain PAC is going to be supported by 3 billionaires forthwith. And I think you're going to hear a lot more about that in the airwaves. I'll leave it at that.
And I just want you to know that Gerard Dashe will not be one of the billionaires supporting the PAC. Hopefully, more qualified billionaires are. So anyway, awesome. So listen, I want to thank, we're a little over time. I want to thank Bill and Todd and all of our speakers. I will leave this thing open for a few minutes. If anybody wants to scrape the chat, this will be up on our YouTube video. And if you, yeah, so I'll just leave that, and then you guys have a great day. Oh, we do this every month on the 4th Tuesday of the month at the same time. So if you'd like to attend future ones, by all means, if you register on our site, we'll add you to the calendar invite. But again, I want to thank everybody for attending, and we'll see you next time.